Patriot Radio News Hour, Joe and Jason, on this Tuesday. Hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And as we wait for Thursday, because, that's kind of how it is now. You got to, what days are going to be the big days? Of course, Thursday we're going to get CPI. We're going to get jobless claims and a few other pieces of economic data. But right now, Jay Powell is talking in front of the banking committee. It's a semi-annual. It's a 2-day deal. I think tomorrow, don't quote me on it, but the finance committee maybe tomorrow, something like that. Some of these committees, and he can go in there, I guess, and tell a bunch of lies and try to make everybody feel good. And it's always scary. I had to stop watching it. So, I'll be honest with you. Don't know that I really knew this 20-plus years ago before I started working and then eventually owning Patriot. Right? I don't know that I watched the news and this and that, but, I wasn't diving into it like this. So, you start paying attention. And you're thinking, okay, we elect these people to Congress, right? And they're going to represent, your community, represent your state, and you get put on committees. And you would think, like, okay, well, the banking committee, I'm going to have somebody that maybe knows a little bit about banking. Something like that, or at least, has some kind of knowledge about the dollar, some kind of knowledge about the Federal Reserve, something like that. No. Mm-hmm. No. I remember one year I was watching it, and I want to say it was before the financial crisis. Could have been after. But Maxine Waters was on the banking committee, and she, this woman's been elected to Congress a kabillion times. And I don't know how long she's been, but she actually thought our currency was still backed by gold. I mean, these were the idiotic questions that they would ask. Matter of fact, the only one that was any good was Ron Paul. Right? And Ron Paul, you got 2 minutes. Okay, your time is up. Your time is up, Congressman. Your time is up. Or I don't know. He wasn't a congressman, I guess. He was in the House of Representatives. But your time's up. Remember, he asked Ben Bernanke, is gold money? Right? I don't know if any of you remember that. But, yeah, I can't watch it anymore, Jason. I just can't. The questions that they ask, I'm literally like, oh, my, why are you even on this committee? You don't even know what you're talking about. It truly is. It's disturbing the lack of understanding and knowledge some of these people have that are on these committees. No wonder why we're in the mess we're in, right? Because, hey, it's almost like they go out of their way to make sure. Okay, listen, we don't want any more Ron Pauls on these committees, right? Let's get the people that don't know anything, and anything Jay Powell says will sound really smart.
Unfortunately, that's a lot of Americans just believe that the people that are in Washington D.C. and the people that run banks and they believe these people know what they're doing. They just believe everything that they're saying, right? If I were hiring people to do a job, I would make sure that these people, knew what they were doing, right? And it's just not so. I got that clip. If you want to play on the next segment, I got the clip of the Biden's economic advisor being asked a few questions. Remember that? He doesn't even know the simplest of things. This is the guy advising Biden personally.
Right, yeah, he doesn't even understand the treasury markets or how money's created. I mean, he doesn't understand any of those things, but he's the head economic advisor. So if you actually don't want to learn anything about how the Fed works and our monetary policy, watch Jay Powell. I don't know, is it on C-SPAN? I'm going to guess it's on C-SPAN. You can actually become dumber having listened to the testimony from Jay Powell. But that's going on for the next few days. But Thursday, remember, Thursday's the day that matters. I'll just say this. Buy gold before Thursday. That's my that's my advice to you. The hurricane, Burl, right? He's dumping rain, and it was only a Category 1 by the time it made landfall, and it came all the way up to Houston. So remember we thought, well, maybe it's going to be the northern tip of Mexico or the southern tip of Texas. Well, it went farther right. There's over 2.4 million people that still don't have power. Now they're going on 2 days. Here's what's interesting. The port of Houston is where the vast majority, because we do export crude. We export a lot of crude products, right? Whether it's diesel, crude for plastics, gasoline, stuff like that. It all goes out of that port. It's closed. So are several of the refineries. But I guess in a little bit of good news, well, if the port's closed, the inventory can't leave. So we may, we may luck out at least for a day or two. It better open up here pretty quick. Otherwise, there's going to be a big problem. But I'm just worried here. Since when does a Category 1 hurricane knock out all the power in Houston? How does that happen, right? It's not even a big one. I think there's a lot more to worry about than people think when it comes to the fragility now of, it seems like, the entire energy complex, not just here at home, but all over the world. I hope I'm wrong about it. It just seems kind of odd that this is a Category 1 storm causing this much problems. We'll be back after the break. 10592, Joe and Jason on this Tuesday. We've got people listen all over the country, all over the world to this show. We've got plenty of listeners, Texas and Louisiana, all along the South, Florida. One of our listeners from Louisiana just texted me, was saying, hey, Shreveport got hit. There's been tornadoes, power outages, flooding. It's going to be, man, the year of chaos. It's what it's going to be. It's what it is absolutely going to be. I want to be wrong here. And again, I don't control the weather, right? I don't know. Mother Nature, she's going to do what she's going to do. But this is the one year I really want these guys to be wrong. Right? We always make fun of the weather. Of course, here in Arizona, this got to be the easiest weather job of all time, right? I mean, 320 days a year, you're going to be right by saying it's sunny outside. I mean, right? I mean, literally, it's got to be a pretty easy gig. I don't know, but I've got a bad feeling about it. Let's just say this. Now, here's the good news. Being told that the Port of Houston hopefully will reopen by this afternoon. That'll be a good thing. We'll see. If it doesn't, then there's going to be problems. And I know people are like, well, who cares if some country doesn't get their oil? No, a lot of this oil, too, goes to refiners in other parts of the country. So if those refiners don't get the oil, right, well, then there's going to be a problem. So let's hope. My
guess is, Joe, that they also import there. It's probably not just export there. They probably import as well. As you were talking last segment, it was like, I wonder how much oil they import at the same time that they're exporting oil. I wonder how inefficient they really are when it comes to oil.
Yeah. It's going to be – I think we're going to find out. How about that? I think we're going to find out. I hope I'm wrong. I don't want to be right because that's not fun. And, of course, obviously no power's no fun. No thanks to that. Quick look at the markets here. The Dow is down 90 points. The S&P, we'll see. Wait till it goes down. I don't know when, but it's still up 8 points, right? And, almost 5,600 and – it's all the same 5 stocks. As long as you got those 5 stocks, you're good. The Nasdaq's up as well. The 10-year note, 4.33. Oil's up, but could be worse, right? So it's $82 and change. I'll call that a win for now. I guess we'll know more over the next few days on oil. Gold's down $1. Just gold's kind of just had some profit taking yesterday. Just kind of hanging out. Like I said, Tuesday or Thursday is going to be the day. But 23.54. Silver $30.58. We're watching the Japanese yen again. I know it's getting boring here. Almost 162 now on the yen. Intervention not helping here. We tell you all the time, get your butt diversified. Get your butt diversified. It's going to be, the boom and bust cycles. This one's going to be the biggest one yet. Check out our friends over at YRefi. Why? Because you can get great fixed rates of return, up to 10.25%. That's not too bad. It's not too shabby. Not correlated to the stock market. I'll take that all day. Because when I tell you be diversified, what markets am I worried about? I'm worried about the debt markets. Right? I'm worried about 401ks, IRAs. I'm worried about your money market accounts. Man, those rule changes just suck. I'm worried about excess money in your bank accounts. Be more diversified. If you've got $50,000 or more, you can use it as income. You can compound it. You can do what you want. Here's the great thing. These guys don't play any games, and it's a really cool investment vehicle. Call them up, 888-YREFI24. That's 888-YREFI24. Or check them out at investYRefi.com. But Jason, another shocker yesterday after the bell. Credit card debt, which was already at an all-time record high, surged another $7 billion. And Jason, they were expecting this to decline, right? They were hoping that, hey, people are going to put the plastic away. That it's not a good sign, right? Because already we know credit card defaults are on the rise. By the way, interest rates on credit cards, another new all-time at record high. Non-revolving credit, that's student and auto loans. It did increase, but it was about a $4 billion increase on what they call non-revolving credit. Credit card debt jumped by $7 billion. Usually it's the other way around, right? The non-revolving is usually the bigger number.
I saw a stat, might have been over the weekend, of credit card, 90 days in default credit card payments are up 40%. So that means 90 days or more. So that means people can't pay for 3 months. I mean, that usually means those are the people that are starting to give up and just like, well, I'm not going to pay it at all. So up 40%, and that number matched where we were right before the housing crisis got going. So we're starting to see a lot of those numbers that are matching 2007 now, Joe.
Yeah, and think about this, because it's interesting. Fannie and Freddie yesterday said 90 days more delinquent on home loans. Rose again. Now, it's still low, but, man, that's the last thing you want to see here is the fact that, and it's Fannie and Freddie, so these are going to be the lower houses, and I say lower, I guess. I don't know what FHA is. It depends on the state. But I think here now, like FHA, I think, don't quote me on this, but it may be like $700,000. I mean, it's gotten pretty high. It used to be like FHA had to be like under $250,000, but it is coincides with the misery index, which came out today. Yeah, they're saying that more and more Americans are having issues paying their bills. Negative real wages continues to affect. They're saying that the index now 7.4%, up from 6.8. And of course, Jason, if you're approaching 10% of the people can't pay their bills, that's a huge banking problem, right? I don't care who you are. That's an index you don't want to see rising.
Yeah, those more indications of things sliding in the wrong direction, Joe. Everything we just mentioned. So yeah, these are the things that led up to the '08 housing crash. I mean, these are the kinds of numbers that were happening, and this particular time is much worse, Joe. Everything is much worse. They didn't solve or make things better, and now we're back. We're not back in the hole. We got out of a hole and we jumped, they jumped us right into a bigger, more massive hole, right? And how do they get out of this one, Joe? Yeah, just change the entire system. How painful is this going to be we're coming up on?
Yeah, and then Helen of Troy today. So a lot of people may not be familiar with Helen of Troy. They are a very big consumer-based company. They bronze shavers, all kinds of stuff. They do a ton of stuff. Last year, they earned $1.94 a share. They came in this morning 99 cents. The estimate was $1.59. It is a huge miss, but it got worse. Net sales at Helen of Troy down 12% year over year. Home and outdoor net sales down 8.6%. Beauty and wellness and Helen of Troy, big shampoo products, all this stuff, down 15%. Jason, and we're starting to see this trend now. We saw it in restaurants, right? Now it's spreading. Walgreens, have you seen the latest? So I know they announced they're going to close 91 stores, but now people are saying that they're going to close up to 2,000 stores over the next 3 years. I mean, that's mind-blowing to think about. And then now Helen of Troy comes out. Big Lots may go under completely. Big Lots are saying, hey, listen, we're closing stores. We may be done. And they've got 1,400 stores. It's starting, Jason. We've seen this play out before, but this is a very big indication of why Jay Powell this morning. I'll just give you a quick highlight here. I think we're going to get a rate cut in September. I've been saying that for a while. But Jay Powell, in his appearance today, saying holding interest rates too high for too long could jeopardize economic growth. At the same time, the progress we've made in lowering inflation and cooling of the labor markets over the last several years, elevated inflation is no longer the only risk we face. So Jay Powell now setting the table here, and this is how this works. They're not going to cut at this meeting because they didn't talk about it enough. I think what Jay Powell's doing today is setting the table for the September rate cut. I actually think they're going to cut again after the election. I think it's going to be a cut in September and then a cut in December. But this is why I think you're going to see much higher gold prices. By the way, at these prepared remarks, reducing policy restraint too late or too little. So pretty strong words would unduly weaken economic activity and employment. So Jay Powell clearly on the dovish side in the statement. This was the prepared statement before anybody asked any dumb questions, but saying that, hey, we've got to be vigilant here that not only do we need to cut rates sooner rather than later, the other big part of this is, hey, guess what? We're talking about multiple rate cuts, and I think that's exactly what we're going to see. He said in recent days, so maybe, I don't know, over the 4th of July holiday, maybe they had a big get-together, but this appears to be the shift we've been looking for because the Fed likes to telegraph their moves. Powell and his colleagues have indicated that inflation data has been encouraging after a surprise jump to start the year. And they said after a lack of progress, things have definitely improved. More good data will strengthen our confidence that inflation is moving substantially towards the 2%. Right? Well, I guess they're 2%. I don't know what 2% is. You know, it's kind of like 2% milk. I'm concerned that if the Fed waits too long to lower rates, it could undo the progress. That was Sherrod Brown from Ohio, the committee chair. And if unemployment trends upward, you must act immediately to protect American jobs. Workers have too much to lose, blah, blah, blah. We're giving this guy way too much credit, way too much power. Cutting interest rates a quarter of a point, not a quarter of a point. Here, the realities are these guys abandoned economic policy a long, long time ago. But nonetheless, interesting comments coming out of Jay Powell. And again, I think we're going to see a rate cut in September. That's just my opinion. But I think we're actually going to see multiple rate cuts. It's going to be interesting what Thursday's data looks like. I knew Thursday was going to be important. It's now even more important. Any tick down in inflation is going to be very positive. And if an uptick in jobless claims goes with it, look out, right? Gold's going to run. Patriot Radio News Hour will be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. I think, I really do. I think Thursday's going to be a very pivotal day. Any move down in the CPI is going to be viewed very bullishly, and then we'll have to watch jobless claims. Are we going to get another step up in claims? Right now, yesterday we started with $20 gold, both Liberties and Saints. Listen, I want you to scoop them up here. We're cutting them way, way, way back. Save $50. 1 through 9, you're saving $50 at $2,525. 10 or more. $2,495. You got gold, almost $2,360 here. That's just a great spot to be in. And I think right now it's pretty clear that Jay Powell is starting to set the table. This is kind of what we've been waiting for, because this is how the Federal Reserve operates. They like to telegraph. Now, are they smart? I didn't say that. Right? Are they doing the right thing? Didn't say that. But the one thing, at least about this version of the Federal Reserve, Jason, they do what they say they're going to do, right or wrong. They like to set it up and give, clear message. Who are they giving clear messages to? Their buddies on Wall Street, to the bankers. We're giving you a clear message, guys. Okay, we're almost there. We just need, one more good number here, and I think we're going to be able to do it. And, of course, remember, they want people to get laid off. And, Jason, the unemployment rate now, 4.1. Not that that's super high, but when you think about, gosh, it was 3.5 to start the year. That's a pretty big move.
Well, unemployment will go up if you keep talking about businesses that are going to have shutting down. I mean, the one thing I didn't get to say on the last segment as you're talking, and I forget which business it was, or the one that says they're going to be shutting down for the next 3 years. Which business was that?
Walgreens.
I'm not the super expert on running businesses, but I have a business sense to me, and if I were running a business, even a big one, I think, even if it's a big business, isn't the object, hey, if things aren't going right, let's come up with a plan to make it better as soon as possible? But Walgreens is saying we're going to be closing stores in 3 years. Not only are we closing this year, but we're closing next year, and we're going to be closing the year after that. What are they seeing that tells them that for the next 3 years they're going to be shutting stores down? How bad is it really going to get, Joe, when you have big retailers saying stuff like this? How can you project that bad a business unless you know something's going to happen? Not. I would forecast that we're going to come out of this thing at some point in 3 years, right? If we're running a business, Joe, if the things aren't going right, I think we would try to figure out how we're going to get it right before 3 years, right? Why would you say, well, you know?
It's a great point. How do you know when these stores are going to turn around? What their earnings call was a disaster. We've seen a bunch of these, like Helen of Troy, huge misses, not even in the ballpark type things. And yet we talk about, I don't even know, what is it, like the 35th, 36th, 37th, 38th all-time high on the S&P. And again, it's 495 stocks versus 5, and the 5 are winning, right? As well, their market share, they're over 60% of the S&P. But you bring up a great point. That seems like, man, what does he know that we don't really know, right? It seems like they know something we don't know, and that would kind of make sense, doesn't it? That this is what we're seeing, and we've been through this before. We've seen the boom and bust cycles. We saw the dot-com cycle. We saw the financial crisis cycle. We know this other cycle's coming. This is what we're going to do.
I mean, don't they have, if it's what the news says it is, there's this election in 4 months. Don't you got to think, as Walgreens, you got to say, well, what if Make America Great Again happens? Yeah, 3 years. We're not going to close stores in 2 years. Well, America might be great again. But they're saying no matter who wins this thing, it ain't going to matter. We're going to be closing stores in 3 years. It's amazing, Joe, that some of the things that are being told to you, if you just sit there and listen to it, that Walgreens is whatever their business model is, it's to shut down stores and to ride off into the sunset. That's what that sounds like.
Well, you know what they said in their earnings report? Hey, we've got over 8,000 stores. 25% of them don't make money. Well, hey, I got a way to make the financials look a whole lot better, right? Let's just close them, right?
Yeah.
Think about it, right? The next closest Walgreens is going to get at least some of that business, right? I mean, hey, not only are we going to get rid of the stores that didn't make any money, but just think about how much more money some of these other stores can make.
Unless Walgreens is thinking, well, when we close 2,000 stores, that business is going to the competition. That's the only thing I could think, Joe. Or are they going to another Walgreens? And maybe they see a domino effect. Their closing of stores ends up going to, I guess, I don't know, Joe, who's a little more cheaper than Walgreens? Does Walmart do all the things that Walgreens does? Does some of these other stores do stuff at the same price or cheaper? Maybe that's what they see. It's like, well, we're being pushed out.
Some of these people are forced, right? My insurance company says I got to go to Walgreens, right? That they take my insurance, right? So you're right, though. They're not going to get all of it, right? They're going to lose a big chunk of it, but still, if the next closest store gets another 10% bump in business, I guess, why not? But about 2,000, that just seems like a lot. And like Jason said, I can understand. We're closing stores this year, and we're closing stores next year. Okay, that could kind of make sense. But they're talking about 2026, 2027, right? I mean, yeah. It's a really great point. I'm glad you made it. That it is a very interesting point. How about this? You think that we haven't spent enough money already? The new president of Panama, by the way, got into office July the 1st, says that they have reached an agreement with the United States with the goal of cutting the flow of migrants through the, that Panama corridor, the Darien Gap, they call it. Guess what?
Yeah.
According to the president of Panama, we've agreed, the U.S. government has agreed to covering Panama's expenses for deporting people who enter their country illegally. So yes, not only will we have to pay to deport them from here, we'll pay other countries' bills to deport them.
It sounds strangely like we want those people. You can send them our way. That's what that sounds like, Joe. Send them this way. Just kick them out. Here's the money. Kick them out. Send them this way.
Hey, don't worry. We'll pay for it all, too, if you do it. Yeah. All right. Sure, we'll take it. Patriot News Hour. We'll be back after this. 800-951-0592. Patriot News Hour. Joe and Jason here on this Tuesday. Just want to remind you again, if you don't hold it, you don't own it. Right? Your bank account, you don't own it. That's a contract. That contract. You know, and we say it all the time. Click OK, initial here, sign here, click OK. That's a contract. They make it sound so easy, too. And let's face it, they just tell you click OK. Click OK, initial here, click OK, da-da-da, blah, blah, blah. Right? Who'd want to read it anyway? It's a microscopic print in some little kiosk thing that, right, you couldn't read it if you wanted to. Tells you. You don't own the money. We do. You're an unsecured creditor to the bank. By agreeing to this, you agree to our terms. Part of that is we can change the rules whenever the hell we want. Part of that has been dictated by the FDIC, by the SEC, by the Federal Reserve, even by Congress, right? Dodd-Frank. Well, that gave the bank a bunch of power, right? The ability to tell you no. Well, I want my money. No. What do you mean no? I want my money. No. Mm-mm. Or, hey, I want my money. How about a fine? What? Yeah, we'll call it a fee, whatever you want to call it. Tell you what, we'll let you have your money, but we're going to whack you 20%. Yeah, they have that power. Money market accounts, it's gotten even worse. I don't know. It's no worse than a bank account, to be fair, because at a bank account, the FDIC doesn't have any money. By the way, money markets, which are also quote-unquote FDIC insured. You know that there's 1.5 trillion. You know what? I'm going to look it up. I don't want to get it wrong. I know it's well over $1 trillion in money markets. What is $100 billion going to do? Nothing. But the same rules apply there. Well, I want my money. How about a penalty? Well, I don't want to pay the penalty. Well, I guess you don't want your money. Then maybe a month goes by. Maybe not. Now all of a sudden you're like, you know what? Screw it. I'll pay the penalty. Call them back up. Oh, that was last month. This month, nah, you can't have it. Yeah, they're allowed to do that. Yeah. Why? Because it's not yours. It's contract. Now they're going to be able to dilute your money in a money market account. If your money market breaks the buck, they've frozen. You know what? You know who knows this really well? And we probably don't talk about it enough. People that have invested in real estate investment trusts, they figured out the hard way, haven't they? Yeah, they just, hey, we're only going to redeem this much this month. Sorry. Oh, well, you can apply next month. Oh, wait. Nah, we're only going to redeem this much. Try again. Oh, wait, you know what? We're not going to redeem anything right now. Sorry, you just got to ride it out with us. Right? All of these things apply, and it's going to happen. They didn't put these rules in place because they didn't think they were going to need them. They knew they were going to need them. They knew it in the financial crisis. They were going to need them. How about this? Fifth Third Bank. You know, you've heard of them, right? They're one of those. You know, they're not the too big to fail category, but they're well, they are, right? We know that, right? But they're a pretty good sized bank. Of course, my computer just decided to stop working. Here we go. Maybe they didn't want me to tell you. Our U.S. watchdog, our top watchdog, the Consumer Financial Protection Agency, announced this morning that the bank is going to be fined $20 million for allegedly opening fake consumer accounts forcing auto insurance on consumers who already had coverage, and then loading up their own. These are people, they bank with them. They literally harmed 35,000 of their own customers. So you can't file a class action lawsuit. Like, these people should have all gotten together and sued the hell out of Fifth Third. Can't do that. You clicked OK. You initialed. Can't do that. By the way, thousands of them had their cars repossessed because Fifth Third charged huge amounts of fees, what they're calling loading up auto loan bills with excessive charges. Also telling consumers that they had to buy another form of insurance that they actually did not need. It didn't do anything. And ends up costing them their cars. Well, guess what, Jason? They paid a fine. No one went to jail. Everything's fine. And it was just $20 million. And it was only 35,000 people. So what?
Yeah, well, and as you said, they know this stuff's going to happen. It's always, like Walmart knows they're going to be closing stores for 3 years. Yeah, they know this stuff is happening. These rules are put in place because they know this stuff's going to happen. Joe, we're talking on the air because we know this stuff's going to happen. We sell gold because we know this stuff's going to happen. I bought into this gold company because I knew the next fraudulent emergency was going to come. And people, when they get scared and things are going the wrong direction, the news cycle is telling you to be afraid. The flight to safety is always to gold and silver, Joe. The flight to safety economically to put yourself in a stronger position when you don't know what's going to happen on the paper markets. It's gold and silver, Joe. It's why we talk about what we talk about, Joe, because the bad news, there's not a lot of good news floating around, right, to paint a rosy picture. There's a lot of clouds gathering.
Well, allegedly, the two guys running for president have really low golf handicaps. That's what I heard anyway. $20 gold pieces, 1 through 9, 25, 25. 10 or more, $2,495 at 800-951-0592. Jason and I are going to wrap it up right after this. 800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up this Tuesday. Just telling you, what a great time to buy. Prices are close to spot here. $2,525, save $50 on a $20 Saint or a $20 Liberty. But wait, there's more. If you buy 10 or more, $80 you're going to save. $2,495. I love the setup here for Thursday. I got a good feel, especially here in Jay Powell today. Really kind of setting the stage here for rate cuts, which tells me, because, they've got the data. They've got way more data than we do. I like Jason's point. The guy at Walgreens has more data than we do. Right? They know something's up. 800-951-0592. You know what? You want another reason? I'll give you one. How about, I heard one of the liberal commentators was saying, hey, the next debate, they should be able to have their staff up there with them and give them all microphones. Yeah, that way they can answer the questions, for Joe Biden, come out, right? Then you can just see how he reacts and stuff. That's right. I got a better idea. You know what? Let's not even have an election. Seriously. Let's get it on. We can have it like on pay-per-view or something like that, a golf game with Trump and Biden, right? They got to carry their own bags. Biden was said, carry your own bags. They'll play 18 holes, right? And we'll just all watch, right? And whoever wins, right, they're the president. Why not?
I don't think the economic. If I were the Trump team and they said let the advisors come up and be a part of the debate, that would not help Biden. I didn't get a chance to play that clip, but that economic advisor, you put him up there, no wonder Biden sounds like a clown, right? I don't know what Democrat would think that's a good idea. I guess they don't really know who's in the cabinet and how really shoddy the Democrat Party really is set up this year. Let's put the advisors up there and then make them have a whole bunch of Bidens up on stage all at once. That's not a good strategy. If I were Trump, I'd be like, yeah, let's do that. Let's. If Trump knew better,
Trump would be like, we're not doing that. His advisor, well, we're going to do.
I know.
He'd be like, we're not doing that. I don't know. That's just a thought. I want to see. I do. I want to see this golf match. I'm ready.
I just got a video sent to me. Now we're talking golf. It's the video came. It says everybody needs to remember this video. It's way back in 2001 or 2000, maybe it's 2002. It's George Bush Jr. And he's like, we got to get these killers. We got to get these terrorists. We're going to get these terrorists. We're going to go get them. Now watch me take my shot. And he swings a golf club. Like in the same sentence. In the same sentence, George Bush, we're going to go kill the terrorists. Now watch me take this stroke.
See? That's what I'm saying.
Oh my God, these are our leaders. How elitist do you got to be to think that that's an okay thing to do? But obviously back then it was okay, and now look where we're at. Can we have someone help us with the questions while we're on stage?
Right. Hey, wait a minute. Can I bring my wife on stage for me to help me answer these? Yeah, that's the guy running for president. Yeah, you may want to get some more gold put away. 800-951-0592. Jason and I were coming right back with the Half Empty Cup.